what is the best trading strategy for beginners who are looking to trade Forex? Now, this is a question that a lot of us always get. Okay, a lot of people email us asking us what is the best trading strategy. And after some discussion with our team, today we finally decided to put together a best trading strategy. Okay, now there's a reason why of all the strategies that we know, we chose this strategy. Okay, so we'll go into that in this video as well. Okay, so here's what we are going to be covering today. Let me just, okay, so in today's video, we're going to talk about why we recommend that you start off by trading breakouts. Okay, why trading breakouts is very beginner friendly and why you want to use that as your first trading strategy, especially if you have just you are just starting out, or you're still struggling, then you want to try trading breakouts first. Okay, after that, I want to show you the exact entry criteria. Okay, because I don't just want to tell you, that you should be trading breakouts and leave you hanging there. Okay, I want to give you the specific steps. Okay, I want to give you a step-by-step guide on how do you actually trade breakouts. Okay, then I'll show you some examples. Okay, some case studies of how do we identify these trades. Okay, and lastly, if you stay till the end, okay, I'm going to give you some bonus tips to increase your win rate. Okay, these tips are massive. Okay, in fact, I have a very good tip inside, one of the tip inside that has saved us so much money just by implementing it. Okay, so if you're already an existing trader who's doing decent, you are trading breakouts and you're having good win rate, okay, you still want to watch this to the end, because this bonus tip that I'm going to provide at the end is going to help you further increase your win rate. Okay, so this video is really for everyone. Okay, just whether you are starting out, which actually this video is more for those kind of people, but even if you are a proficient trader, we have something in this video just for you. Okay, so if you're new to the channel, make sure you hit the subscribe button, give us a thumbs up. Okay, that will help feed the algorithm so that we can reach more traders and impact more traders like yourself. Okay, we also have a 3-day trading guide for you. The link's in the description, so make sure you grab that if you are new to our channel. Okay, so let's talk about why you want to start trading breakouts. Okay, at the beginning of this video, I explained that we thought about many trading strategies that work, but we actually came together as a team to think about which trading strategy would actually be suited for a beginner. Right, and after much discussion, we came to the conclusion that as a beginner, the best trading strategy would be trading breakouts. Okay, why is it so? Okay, I have it written over here. Okay, as a beginner trader, okay, you want to be right immediately. That's normal. Okay, that's normal. Everyone goes through this learning phase. Okay, in fact, we get a lot of questions like asking us, how do I win 90% of the time? How do I make sure that 95% of the time my trades are profitable? Okay, this is the kind of mindset that most beginner traders have. Okay, and while it's not the right mindset to have, okay, we understand that it's something that people start off with. Okay, personally, I also start off like this, right? Because I'm a perfectionist. I want to get every single trade right. So I would try my best to get like 90% hit rate, which no matter how hard I tried, I couldn't get it, and that was very frustrating. Okay, so it's only when I learned that you don't have to be right straight away, you don't have to be right all the time, that my trading actually improved. Okay, so if you start trading with breakouts, most of the time, if you do it right, you will see your account in the blue or green immediately, and that's very good for your psychology. Okay, it will reinforce your learning. Okay, it will encourage you to trade, right? It will keep you motivated to learn more about trading. Okay, but if you do retracement trades or reversal trades, okay, because reversals takes time. Okay, even retracement trades takes time, because essentially you are trading the reversal of the counter trend and hoping that the main trend resumes. So in a sense, it's still a retracement trade. Okay, so this kind of setup takes time, and that affects your trading psychology, because you want to be right immediately. But if you see that your positions are in the red, it's going to green, going to red, going to green, and back to the red, and you are not strong psychologically to hold a position, that's where you are going to lose money. Okay, so this is why I advocate start with trading breakouts. Okay, so I'm going to show you how to do it, so not to worry, I will do a step-by-step process. Okay, if you need more help, just leave a comment down below. I'll do my best to address any concerns you have. Okay, so let's talk about the breakout entry criteria. Okay, how do you find a good breakout setup? Okay, now consists of 4 steps. Okay, I'll go through each of these steps step by step, but this is the overview of the strategy that I want to teach you in today's video. Okay, number 1 is you want to identify key support and resistance level. Okay, in trading is always about levels, so you need to look for the right levels. Okay, so you start with identifying the levels that you're interested in. Okay, number 2 would be you look for a build up. Okay, you want to have momentum on your side. You want to see that either the bulls or the bears are building their position. Okay, you can use the 20 simple moving average or the ascending trend line, or if it's a bearish setup, then it's going to be the descending trend line. Okay, the next thing you want to look for is you want to look for a series of engulfing candles attacking the support or resistance level. Okay, not to worry if you're a bit confused, you do not understand what I'm talking about right now. That's fine. Okay, because I have examples for you, so do not worry. Okay, and step 4 is you will place the stop loss below or above the recent engulfing candle low or high. Okay, so of course, if you are selling, then you want to put your stop loss above the engulfing candle high, and if you are buying, you want to put your stop loss below the candle low. Okay, so before I go on to the case study, I just want to make sure that you really understand what I'm saying. Okay, because I cannot assume that you understand what I mean when I say engulfing patterns. So I want to just touch briefly about what I mean by engulfing patterns, as well as what do I mean by trend lines. Okay, what do all this mean? Okay, remember this video is meant to be beginner friendly, so that's why I want to cover everything. Okay, so let's talk about this bullish engulfing pattern. Okay, it's very simple. So basically you have a candle, a bearish candle, and then you have a bullish candle that close above the opening candle of the previous candle. Okay, so you can see in this case, the close over here is higher than the open of the previous candle, and it engulfs nicely. So this is called engulfing pattern because it kind of like eats up the other candle's body, right? So the body is actually the open to the close here. So this is the candle body, and this engulfing pattern has swallowed up this pattern, this candle over here, this bearish candle over here. Okay, so this is the bullish engulfing pattern. Okay, let's look at the bearish engulfing pattern right now. So you can see it's actually just the opposite. Okay, you have a bullish candle here, and then you have a bearish engulfing pattern here. So you can see in this case that the close, okay, it's lower than the open. Okay, in this case, the bearish engulfing pattern is stronger because the close is also below the low. Okay, this is not mandatory, but whenever you see a pattern like this where the close is able to close below the low of the previous candle, then this is a more powerful engulfing pattern. Okay, but in this bullish engulfing pattern case, it doesn't close above the high of the candle, but nonetheless, this is still a engulfing pattern. Okay, so this is the pattern that we are looking for in the build-up. Okay, and this is how you draw the trend line. Okay, basically this breakout strategy involves trading the ascending triangle and descending triangle, right? Because if you think about it, there is a key support and resistance level horizontal line here, and you are trying to buy the breakout when this level is broken over here. Okay, let me see if I can draw it. Okay, you are trying to buy the breakout somewhere here. Okay, so you want to use the you want to see that there's a form of build up. You want to see that there's an engulfing pattern over here, and you want to see that there's an engulfing pattern over here, and couple of more engulfing patterns on the way up. Okay, so basically what you want to see is you want to see engulfing patterns moving upwards. Okay, that is what I call a series of engulfing patterns. Okay, the opposite is also true for the descending triangle. This level here is your key support level, and you're just waiting for this level to be broken. So you want to see that there is an engulfing pattern here, bearish engulfing pattern here, there's a bearish engulfing pattern here, and ideally more engulfing patterns are forming along this trend line. Okay, so this works the same if you are using a moving average. Okay, the moving average will be something like, is coming down. Okay, and you have this level here, and price is it's the same thing. Okay, and then it breaks, and let's say your moving average is sorry, let me just draw it properly. Yeah, something like this. Let's just ignore this portion. Okay, let's say the moving average is something like that, and price is being resisted by the moving average and forming bearish engulfing patterns. Okay, that's what you want to be looking for. Okay, so now that we've gotten this out of the way, you understand what the engulfing pattern is as well as what the trend line is. Okay, let's show you some real case study. Okay, I want to show you how to actually do it. Okay, so step one, remember, step one, what do? We identify the key support and resistance level where we expect that, when there's a breakout, price is going to move in a big way. Okay, so in this case, you can see over here that, let me just show it here. Okay, in this case, I've marked out this level 1.2431. Okay, you can see why this is a strong level. It's very obvious because you have one touch here, you have multiple touches all over here. Okay, if you cannot see it, just switch to a line chart and you will find that this is actually the line. This is actually a level because that's the candle close. Okay, for me personally, my eyes are trained, so one look I can see it. But if you can't, it's fine. It's fine. You can just switch your line chart. Okay. So what happens when you identify this support and resistance level? In this case, it's a support level. That's step one. Okay. Step two is you want to look for a build up. Okay. So in this case, you can see that there's a build up in a sense that there is a. Let me just draw it here. There is an engulfing pattern here. Okay. Sorry, not really an engulfing pattern. It is almost an engulfing pattern because it did not close below the candle body, but it's almost an engulfing pattern. Okay, but this is definitely an engulfing pattern. And then you have another engulfing pattern. And finally, you have this engulfing pattern. Okay, so you do see a series of engulfing patterns, which is what I mentioned over here. Okay, step 3 of the process, look for series of engulfing pattern. And you also see that the 20 moving average, you can see over here. Let me just draw it. You can see over here that it's acting as resistance. Okay, so this is what I mean. This is step 2. So step 1 is you identify the key support. Step 2 is you look for a form of build-up. So in this particular example, the build-up that you are looking at is actually a 20-period moving average build-up. So you can see that the bears are slowly squeezing the bulls out of this position. Okay, and then step 3 is you look at the series of engulfing patterns. So you can see that there is there's a couple over here. And finally, when price broke out, what happened? It had a big movement down. Okay, so this is how you identify it. Okay, so you identify key support and resistance level. You look for the build up. Okay, in this case, this example that I just go through is the 20-period moving average. Okay, you look for a series of bearish engulfing candles, and then you enter the trade. Okay, so in this case, this is how you enter the trade. Okay, so roughly when price breaks a level, you can just put a sell stop if you want. So a sell stop is actually an order to enter when price starts falling, right? Basically you're entering at the worst price. But right now, because we are trying to enter a breakout, that's fine. Okay, and you just put your stop loss above the recent engulfing pattern high. Okay, because we are selling, so your stop loss has to be above, not below. Okay, above the bearish engulfing pattern. So something like this. Okay, how you manage your trade is up to you. Okay, I'm not going to go through that because trade management is another big topic on its own. Okay, if you want more help on that, okay, just leave a comment down below, and our team will put together some materials to teach you how to better manage your trade. But for today, I just want to teach you this beginner-friendly strategy on how to trade breakouts. Okay, so this is how you do it. Now let's look at another example. Now in this example, we're going to look at the opposite. Okay, just now we look at the bearish scenario. Now let's look at the bullish scenario. Okay, so what is step 1? Let's go back to our checklist. Okay, step 1 is to identify key support and resistance level. Okay, so I've done that for you. Okay, I've identified this level. Okay, I identified 1.24819. Okay, so how do I know that this is an important level? Just look at the market structure. You can see over here, 1 touch, 2 touch, okay, and kind of like 3 touch. Okay, in fact, this level was so strong that price came back to retest it. Okay, so step 1, it's done. Okay, we identified the key resistance level in this case, and that's 1.24819. Okay, now let's look at step 2. Step 2, we want to look for the build up. Okay, so what build-up are we looking at in this case? Same thing, you can see that this is the moving average. Okay, you can see this moving average line is sloping up, and price is being held here, being supported here, and price is being supported here, here, and here. Okay, so price is being supported multiple times. Okay, so you have the 20 moving period build up yet again. Okay, in this case, this is a very powerful trade because there's also this trend line build up here. You can see that you can see this trend line that I drew. There is also a trend line build up. Okay, so this is a very powerful trade setup because you have everything aligning. Okay, you have the 20 period moving average doing the build up. Okay, you have the trend line build up as well. Okay, so this is a very good setup. This is a definition of a good setup using this strategy. Okay, so we covered step 1 and step 2. Okay, let's talk about step 3, then we go to step 4. So series of engulfing candles. Okay, I've highlighted over here. You can see that there is a engulfing pattern here. Okay, and there's another one which is not. This is the weaker engulfing pattern because it did not close above the high, but nonetheless, it still closed above the candle body. Okay, so it's still nonetheless a bullish engulfing pattern. Okay, so that is step 3. Okay, step 4 would be to take the trade, and in this case, I've just shown you how I would have taken a trade. I've done something like that. I would have entered when price traded above this recent high. Okay, recent high of 1.24819, and put the stop loss below the engulfing pattern low. Okay, that's how I would have traded it. Okay, so it's rather simple. You just need to follow the steps that I've listed over here. Okay, you can feel free to pause this video, write these steps down, and go practice. Okay, if you need help, you need assistance, you can go ahead and practice this strategy. Email my team at support@financialmarketwizards.com, and we can give you some pointers about whether you are doing correctly. Okay, but you can please go practice this. Do not just watch this video. Okay, because just watching this video on its own is not going to help you if you do not practice. Okay, you're going to have to practice. You're going to make some mistakes, and we are here to help you. Okay, we can look at your charts. We can look at your analysis. Just let us know, and then we'll tell you is there something that you're missing, or is there a mistake that you are making. Okay. So yes, this is how you trade this strategy. So breakout is really a very friendly way for you to trade. Okay, so now I'm going to go on to the last part of the video. Okay, if you made it to this part of the video, good job on you, because we know a lot of people, they watch halfway, they lose interest, they don't stick with it. Okay, and that's why it's very hard for them to be successful if they don't stick with it. Okay, so good job if you are here. So right now, I'm going to share with you 3 bonus tips to increase your win rate. Okay, so if you are already profitable, this will further enhance your win rate. Okay, number 1 is kind of like an obvious one. Okay, but nonetheless, I still need to reiterate this. Okay, you always want to be trading with the trend. Okay, no exceptions. Okay, if you are struggling, trade with the trend. Do not try counter trend. Okay, it doesn't make sense. If you cannot be profitable trading with the trend, why do you want to trade counter trend? It just doesn't make sense. Okay, leave the counter trend trades to when you are very profitable and you want to mix up your play, mix up your trades, then you go the counter trend trades. But if you're still struggling, please do not do this. Okay, use this with the trend and you increase your win rate by a lot. Okay, the second one that I have for you, second bonus tip, is that you want to avoid trading prior to a trading session. Okay, this is huge. This is very, very, very important. Okay, I do not know, you are watching this video, where are you from? But personally, I'm from Singapore, where the time zone is GMT +8. Okay, so what it means for me is that the Europe market opens at 4 p.m. Okay, and the US session starts at 8 p.m. Okay, I do not know where, what time it opens at your country, but you can check out the forexfactory.com. Check out when does the various markets open for you. Okay, you want to look at the Euro and the US trading session. Okay, so let's say for myself, the Euro session starts at 4 p.m. Okay, I want to avoid trading any breakouts at 3 p.m. Okay, before the session, because what happens is that if you enter before the session, before the Europeans come in and start trading, it's very likely that you get whipped out, right? Because during the Asia session, the Asian people push the price up, but the Europeans just smash it back down. Okay, you want to avoid that. Okay, if you want to trade, you should wait for at least 1 hour until the trading session has started, so that price is really firm up. Okay, so that's actually bonus tip number 3. Okay, so in my case, the Europe session opens at 4 p.m. Okay, let me just write this down. So for me, it's 4 p.m. And For US, it's 8 p.m. Okay, so that means I would not want to trade at 3 p.m. or I do not want to trade at 7 p.m. Okay, basically anything close to 4 p.m. I do not want to trade. Okay, sometimes I might even avoid trading 2 p.m. Okay, because there's really no point in trading a breakout at 2 p.m. and then 4 p.m. you worry that the euro market's going to reverse the direction. Okay, so I'll try to avoid this kind of timings, 3 p.m., 7 p.m. Okay, I will wait 1 hour after this session, which in this case for me will be 5 p.m. Okay, for price to firm up, and 9 p.m. Okay. So these are the timings you want to focus on. Okay, the best trade setups is going to happen at 9 p.m. Okay, for obvious reasons, because the US and the Europe market is open. That's where you have the most liquidity. That's where there are most active traders. And that's also when price will move massively. Okay, so if there's only one timing that you need to trade, that you want to have the highest win rate, you don't want to trade during timings which are not so profitable, then just focus on 9 p.m. Okay, for me it's 9 p.m. For you, you need to go check out what time is it. But basically, you want to trade 1 hour after the US session. Okay, so if your US session is 8 p.m., then you want to trade at 9 p.m. You want to wait for the market to firm up before you start taking a breakout trade. Okay, so it's going to save you a lot of money. Okay, it took us a lot of money to figure out the right time to trade. Okay, so I really hope that you benefit from that. I really hope that you take this to heart and you do not trade prior to a trading session. Okay, at least 4 breakouts. Okay, if you trade other methods, you know, I don't know about that. But if you're talking about breakouts, please do not trade 1 hour before a trading session, and please wait for the trading session. You know, to firm up the prices first. Wait at least an hour, and then you go into the trade. Okay, so these are the tips I have for you. Implement it. Then leave a comment down below. Let us know whether it helps you, because you know it helps us a lot. And you should, if you do it right, you should come to the same conclusion. Okay, so that's it for this video. So just a brief recap. Okay, I started off this video by talking about why you want to start trading breakouts if you are a beginner trader, and how it's actually the best you know, strategy that we will advocate if you are new and you're struggling. Start with trading breakouts because it's easy psychologically. Okay, I've talked about the breakout entry criteria. Okay, there are 4 of them. Okay, we talk about over here. Okay, the 4 of them, you identify the key support and resistance level, you look for the build up, you look for series of engulfing patterns, and you place your entry and stop loss, right, with your stop loss above or below the recent engulfing candle high or low, depending on whether you're buying or you're selling. Okay. And lastly, I also talked to you about 3 bonus tips. Okay, make sure you implement this, because this 3 will massively increase your win rate if you do it correctly. Okay, so that's it for this video. Make sure you hit the subscribe button, because we create content like this to take you from a struggling trader into a profitable trader. Okay, we do not charge you for our services. Okay, we have a free day trading guide for you. In fact, our trading course is also free as well. Okay, you just need to open an account with our sponsoring brokerage, and the brokerage will take care of the rest. Okay, the links in the description, so you can check that out at the end of this video. Okay, so thanks for watching. If you have any questions, just leave a comment down below, and I'll see you in the next video.